Ever feel like you're trying to understand accounting, but it's like everyone's speaking a different language?
Yeah, it can definitely feel like you need a decoder ring sometimes, right?
Totally. Like you want to get it, but all the jargon just makes your head spin.
It's true, there are a lot of specialized terms.
So that's what we're tackling in this deep dive. We're cracking open Accounting Explained to Kids. Don't worry, you don't need to be 8 years old or obsessed with cookies, though it helps, to follow along.
It's a great resource. Using something like a cookie business as an example, it makes it way less intimidating.
Genius, right?
Totally. And the thing is, even though it's simplified, those core accounting principles, they're the real deal they apply, whether we're talking about a small business or a huge corporation.
Exactly. So the book starts off with the big WAI, why bother with accounting at all? And they put it really simply, businesses need to keep track of their money.
It's such a fundamental concept.
Right, to make sure they have enough to, pay for everything, pay employees, all of that.
Absolutely. It's the foundation for having healthy finances, whether you're a multinational company or just managing your own personal budget.
That's so true.
Think about it. You've got your income coming in from your job, maybe some side gigs, and then you've got those expenses going out, your rent or mortgage, bills, the occasional spontaneous online shopping spree.
Okay. Who told you about that last one?
Maybe I'm projecting a little, but my point is it's all connected.
It is. And the book does a great job breaking those basic terms down. Income, expenses, then there's assets and liabilities, the stuff we own, the stuff we owe.
It's about taking control of your financial narrative, right?
Yes. And understanding those pieces feels, honestly, kind of powerful. Like you can make smarter choices.
Exactly. It's all about having that knowledge.
Okay, so let's get to the fun part. Cookies.
Who doesn't love cookies?
Right. So the book lays out this scenario. You bake a batch, you sell them for $20. Boom, there's your income.
There you go. And then, of course, you've got to account for the cost of those ingredients. Your flour, your sugar, that really good chocolate you splurged on.
Oh, yeah. Got to have good chocolate.
It all adds up. Let's say, for our example, those ingredients cost you $10.
Okay, so if my math is right, $20 income minus $10 in expenses.
Mm-hmm.
Sounds like we're left with a pretty sweet profit margin now.
You got it. You've got a $10 profit. Your cookie business is officially in the black. And that right there is a simplified example of what's called an income statement. It's a financial report businesses use to track exactly that profitability.
I love it. Okay, but what if, it's one of those days and your cookies are a total disaster, burnt, the dog got into the dough, you only managed to sell $10 worth.
That's business risk for you. In that case, your $10 income doesn't cover your $10 expenses. You'd actually be looking at a $0 loss.
Ouch, that's not a good flavor profile, financial or otherwise.
Right, but it's a super important concept to understand that difference between profit and loss.
Definitely. Nobody wants to be in the red. So we've got our income, our expenses, profit, loss, all crucial building blocks here. Then the book dives into assets, the things you own that have value.
It's all connected, right?
So in our cookie scenario, would that be like our mixing bowl?
It totally could. But thinking bigger picture, assets are also things like the money you have in the bank, any equipment you use for your business, that industrial strength oven you've had your eye on.
Don't tempt me. Okay, and on the flip side, we've got liabilities, what you owe. Let's say you went all out on those fancy ingredients, borrowed some cash from a friend to cover that artisanal vanilla extract.
Yeah.
That loan, that's a liability.
Exactly. A really common example in the real world is a mortgage on a house. The house itself is an asset, you own it. But the outstanding loan amount, that's a liability.
Got it. So then there's equity. And that's what's left over. If you sold everything, paid off all those debts, hopefully more than just some stray sprinkles, right?
Ideally, yes. Equity represents your ownership stake. It's what you'd have left after settling all accounts. And that, my friend, is a concept that's important no matter how big or small your venture is.
So we're really starting to build up our accounting vocabulary here.
We are. It's, like you said earlier, understanding these terms can really give you a much clearer picture of your finances, no matter how you're managing them.
For sure. And the book does a nice job of getting into some of those, like, behind-the-scenes mechanics. They even mention debits and credits, which, honestly, that's usually where I check out.
Yeah, those terms can sound a little intimidating, like some secret accounting code.
Right.
But it's actually pretty straightforward. Think of it like this. Every financial transaction, no matter how big or small, has two sides. So let's say you're buying those ingredients for your cookies, the money going out, that's a debit.
Okay.
But at the same time, you're getting something valuable in return, those ingredients. So that's a credit.
So it's like two sides of the same coin, kind of.
Exactly. It's all about balance, and that's where double entry bookkeeping comes in.
Double entry bookkeeping. Okay, now that definitely sounds intense.
It's really not once you get the hang of it. Basically, every transaction is recorded twice, once as a debit and once as a credit, just in different accounts.
Huh.
It might seem like overkill for, selling a few cookies, but for a company that's doing tons of transactions every day, that's how they keep everything straight. And it helps them spot any errors way more easily.
That makes sense. It's kind of like the difference between scribbling down recipes on napkins versus like a really organized recipe book,
Perfect analogy. And speaking of organization, the book also mentions a general ledger.
Oh, yeah. I was wondering about that one.
So that's our master record. It's where all the debits and credits from our double entry system end up. So you can see all the activity in each account, sales, expenses, all of it.
So it's kind of like the behind-the-scenes control panel for all your finances.
Exactly. And while you don't have to be a CPA to wrap your head around all this, even having a basic understanding can really empower you to take more control of your money.
Absolutely. So let's talk about those three major financial statements that the book keeps mentioning. We've already dug into the income statement, right? That's where our cookie profits were looking good.
Deliciously good.
But then there's the balance sheet and the statement of cash flows. What are those all about?
Think of them like the three musketeers of financial reporting.
Okay,
Each one tells a different part of your business's financial story.
I like that.
The balance sheet, it's all about balance. It gives you a snapshot in time. It shows what you own, your assets, what you owe, your liabilities, and the difference between the two, which is your equity.
So it's like a financial status update. Here's what I have, here's what I owe, and here's what I'm worth. Something like that.
Exactly. It helps you see if you're in a good place financially or if there are areas you need to focus on.
Makes sense.
Now, the statement of cash flows, that's a little different. It's less about what you have and more about how the money is actually moving in and out of your business.
Okay.
Like a river, it's showing the flow of cash over time. Where'd it come from? Where'd it go? That's what the statement of cash flows tracks.
So is that kind of like a financial GPS tracker? You can see the whole journey your money has been on.
I love that. It's a great way to think about it. You can see where your cash is coming from and going to. And if you're smart, you can use that information to head off any potential cash flow problems before they become big headaches.
So we've got the income statement showing us the bottom line, the balance sheet capturing a moment in time, and the statement of cash flows tracking the ins and outs of our money. It's amazing how these three reports work together to paint a complete picture.
It's like having different lenses to view the same subject. Each one reveals unique details and insights, and when combined, they provide a comprehensive understanding of a business's financial health.
This deep dive has been eye-opening. I'm starting to see how even a basic understanding of accounting can be so empowering. Like you said earlier, it's about taking control of your financial narrative.
Absolutely. It's about moving from a place of fear or uncertainty to one of knowledge and confidence. And the best part is you don't need to be a math whiz or a financial expert to get a handle on these concepts.
Speaking of which, our source, Accounting Explained to Kids, makes it all surprisingly approachable. Who knew cookies could be such effective teaching tools?
It's a testament to the power of relatable examples. And while we focused on the cookie business throughout our deep dive, these concepts can be applied to all sorts of ventures.
That's a really important point. So if someone listening is thinking, okay, but I'm not running a bakery, what would you say to them?
I'd say, think of the cookies as a metaphor. Instead of flour and sugar, your business might be selling software, offering consulting services, or creating handmade jewelry. The principles remain the same. You still have income, expenses, assets, and liabilities. The key is to take these concepts and apply them to your specific situation.
It's like learning a new language. Once you understand the basic grammar and vocabulary, you can start forming your own sentences and having meaningful conversation.
Exactly. And the more you use this language of accounting, the more comfortable you'll become. You'll start to see patterns, make connections, and gain a deeper understanding of your own financial story.
So, to wrap things up, what's the most important takeaway from our cookie-filled deep dive into accounting?
I'd say it's this. Knowledge is power. By understanding the fundamentals of accounting, you empower yourself to make informed financial decisions. Whether you're running a business or managing your personal finances, this knowledge gives you clarity, control, and the confidence to navigate the often complex world of money.
Beautifully said. So to our listeners, go forth and embrace the power of accounting. And who knows, you might even find yourself craving a cookie or two along the way.
Now that's a sweet thought.
This has been The Deep Dive. Signing off.